Hey everyone, welcome to your daily update for Sol and BTC. So liquidity is starting to build up a little bit to the downside on the 1 day, just as you'd expect. People are longing as we grind up. There's a few things that just are not right in the market right now. So we have completed the majority of the high time frame shorts on BTC, so it makes sense for it to be moving up. But we are just moving up quite slowly. We may capture or may recover some reasonable levels today, might give it a little bit more of a push. But we might also close inside some pretty big hold levels in the next few days, which means we could end up just dumping back down again. The thing that really doesn't make a lot of sense just right now is actually Sol. So BTC is definitely what is lifting Sol. But if you look at the Sol BTC chart, we've still got the really high time frame minimum obligation shorts that are in play on Sol versus BTC. So there's really only a couple of things that can happen with that structure. And one is that either BTC has to make quite a big move to the upside and leave Sol lagging behind, and that will actually balance out the Sol BTC chart. The other thing would be that Sol has some kind of just very specific ecosystem crash or whatever, and it goes down, more so than everything else, like FUD or whatever, and then they just hit dump and the Sol BTC chart balances out. So kind of keeping a bit of an eye there for that, thinking, oh yeah, what's coming. As far as all the higher time frame liquidity, it'll still be, massively to the upside. So if we start looking at, 30 days, 1 year charts, whatever it might be, it's just like one big scale that says, when are you going to go and take the shorts? If you're on the live stream yesterday, I sort of said it would make sense to, grind up and take some of these shorts right now, just because we have completed those minimum obligation moves, or all bar one of them. There is still a 56k target in play on the high time frame for BTC, but I think it, like, just gut feel is it's not just going to dump to 56k. I think if anything, it's going to go and just take out some of the shorts before it goes. So right, let's have a look at the charts and see what they say. So Sol BTC on the daily. First thing is, we're bouncing off trend, origin, and the reverse of the range trend as well. So really, what could happen from here? We could actually create a daily range. It's got to get up above the wick of the prior candle. So that would be your most bullish scenario, even though it doesn't quite make a lot of sense in the high time frame for this to do this. But if it was to get up over that 13550, then it could start trying to push to the upside and just basically do some retests of some of these broken levels. Now, of course, the way you can sort of tell that it's just a trap is that if nothing engulfs here, so if we close the day below, 13406, anything along those lines, and or below the wick, but the next candle keeps moving up and so on and so forth, what that means is it's creating no new support structure, but the price is going up, and that normally means that it's going to come back down. So that's what we're watching for there. So from a short-term perspective, it makes sense to be bouncing here. From a long-term perspective, it really depends how it closes. So we're also going to run into a range bracket, this 13532 on the daily when we get up there. So how it closes will make all the difference, because you can see if it engulfs that wick off an origin, not only can it create a range to the upside, but it would also be closing up inside the range bracket, which means it's going to try and test the hold. So then you're going to get that move to the upside. The hold roughly has confluence with the trend though, so whether or not it actually manages to get past there, that could be where the trap comes in. So it might just reject when we get up to that 13950 or 13956 sort of retest. There'd be a lot of confluence to reject inside there. Plus we have hard closed this 13718 level, so you've got to really recapture that if you actually want to be able to move up. So okay. So more short version or summary of all that is see how it closes, but still be cautious. It's just it's still in a downtrend. Okay, And if we just look at the bigger picture, we still have this 3-month hold, minimum obligation hold. We're on the wrong side of the interior trend. The target, it is possible that this trend, the lower one here, which is about that 11918, it is possible it can hit that, and that can push back and try to break the hold. But the actual target that this thing is aiming for is more down here in that 10715 to 10062 area. So until it does that, I don't know whether I'd be trusting a heck of a lot of pumps if Sol starts to pump against BTC. Okay, let's have a look at the safety assets. So we hit the trend, and we've rejected back down from it, which means we aren't technically hard closing outside of the top of the range. We did hard close on the daily, some of the origin levels, etc., that were in here. This is the reason why you're getting this little bit of a recovery, or I guess confluence as to why you're getting this little bit of a recovery. Safety assets, including BTC and stables, is having a bit of a rejection, which means Sol can have a little bit of a move up. But yeah, like I say, it's just moving up into resistance. This isn't a hugely convincing dump. It's not engulfing unless it engulfs the prior day candle and gets back inside that range. So minimum, you'd want to see it get back inside this level 4, which is that 69.35. Really, you want to see it engulf the prior day if it's actually going to create a range to the downside, and that would mean 69.21. So if it closes anywhere above there, the structure is doing what it should be doing, which is rejecting from a trend, allowing the altcoins to have a little bit of a breather and a little bit of a move to the upside, but it's not creating continuation by doing this. So yeah, that's what we see there. And if we look at the bigger picture, the weekly is still up above the trend. One thing that could happen is the weekly could keep moving down until it hits the range level down here at 69.39. So you might get a little bit more of a push, and then it could bounce that level and head up here to the 70s, in which case, that would be worse than the prior dip as far as dominance goes for safety assets versus alts. Okay, what's the monthly? And the monthly's kind of just hovering. It has rejected off that 70 level since it opened. So it's just kind of bouncing between the trend and the range trend. Sorry, the range level and the range trend. But a bit too long to go on that to really tell anything. Right, let's have a look at the totals. Okay, so totals on the daily. Again, bouncing off levels you would expect to bounce from. So bouncing off origins, bouncing off trends, all very much normal stuff, really. However, not engulfed yet. So an hour and 57 minutes to go. Will it give a bit of a push towards the end of the day and close over 2.38? Ideally over 2.38, because you want to try and just create a nice new range off the origin. It could close over 2.35, and you'd have a high risk hold level created. We have prior broken trend up here to retest at about 2.45, and we've fallen back underneath the prior trend, resistance trend, and you can actually see that it's now been reinstated as resistance, because if we take that, put that there, you can see we just reject, and so getting back up into this area is possible. How it does it is all the difference. Full engulfment, maybe it has a chance to break those trends and push through. Close underneath and then keep going up, more likely just a trap, right? So that's what we're seeing there. So just looking at the weekly, it's done what it should do. It could maybe push a bit further if it wants to. So, bounced off the weekly origin, hit the weekly range level. So weekly origin, weekly trend, weekly range level. If this doesn't recover and close above that 2.34, the end of this week, and ideally above that range trend at the end of this week, then you'd definitely be expecting it to push down to this 2.09. And let's see, in the monthly is bouncing off the range level, makes sense. So it could just keep trying to grind up. Yeah, that candle can go up and down, up and down, up and down until eventually it finds until all the small stuff has done what it's going to do, and then maybe we get back up to the trend or the range trend. We thankfully haven't hit the break level yet, so most of the long-term moves are still in play. Looking at the 6 month though, we haven't done the retest of the prior hard close break level yet either. So, sort of that 2.16. 2.16 does not actually break the 6 month structure. It just retests it. So, and if we look across at the monthly structure, 2.16 wouldn't actually hit the break level either. So it's a really fine line that it could come back down here, do the retest, and then bounce and move to the upside. But it is very possible. So, and it's got a lot of time being a 6 month candle. Okay. Now, if we just look at alts, very similar thing, but we're a bit closer to the prior broken resistance trend. We've bounced from level 1. We're sitting above the 1618. We haven't gone back up and tested the level 2. So again, it's all about the structure. If it closes over the top of the candle, if it fully engulfs, that's a little bit more bullish. However, if it closes like you see it here or anything not engulfed, sure, it can keep moving up to the range level, but it's not building new support. So just keep an eye on how that one closes. And the weekly is pushing up off the origin. It's gone above the trend. So this is the kind of thing that can be a little bit trappy. It could come all the way up here, retest this range level, which it's dived underneath. But it's got 6 days, so somewhere in the next 6 days, maybe it just ends up retracing all the way back down under the trend. So we haven't quite got to that level 3 yet, so we might go up, pull back, come down. If the end of the week closes back over the top of this prior break level, so gets back up over that 799 area and closes up there, then maybe you can put your bullish hat on a little bit and see if you can get continuation to the upside. And the monthly is bouncing off the backside of the prior broken trend. It's not the first retest of it, but it's heading up. Now, what's it going to hit? Well, it's going to hit this 806 if it keeps going up. And it's going to hit this 863 if it keeps going up. And if they act as resistance, and also the prior broken trend, which is about 842, if any of that stuff acts as resistance, it can push it all the way back down here to the trend, which would be a lower low compared to what you've seen so far this month and last month. So that's definitely not out of the woods yet. It's also very possible that it might try to find something even lower down, just given that it's broken the range trend. So hard closed. Maybe it goes up to take liquidity and then really takes a nosedive. There's areas like this down here at 545, which have not had their retests, and 500. So these are still there. Makes it a little bit hard to trust this pump at the moment. Okay. Let's have a look at Sol. So some of the lower time frame stuff on Sol doesn't look too bad. We've had the bounce, had the next dip. We've started to maintain a trend, and we're doing retests of broken levels. So 104, 105, 106, like this sort of area that's up here. This is definitely resistance to the upside here. We haven't completed the hourly range to the downside either. And we've got, levels like 101, which are broken levels that haven't had retests. So, any kind of range between this sort of 101 area and this 106 area makes a bit of sense. If we get a decent close today, then being able to come up to this 108, 109 is also possible. So, but I don't know, like once we've done that, whether or not we'll just end up coming back down here again. So that's looking at the 1 hour. It's kind of grinding up. It's got a break level to hit. We may get a 1 hour close up inside this 104 area. And we have got a 1 hour range. So we created that down here at about 100. So it's gone through 102. It's sitting at the level 2 now, 104. If we get a close, an hourly close over that 104, which would also be up over top of the origins, then 107, 110 become kind of those next levels, assuming it can actually get through the 105, 106 breaks. So it's possible. 109, you got some confluence there with the first test and rejection on the range trend. So 109 is definitely a possible number if it just keeps grinding up. And for our origin, sitting here at 105.999, so it's got to get through that. We've got this trend up here at 107. So yeah, we've still got quite a bit of resistance up there. We haven't technically hard closed that 102.8 level yet, so, and we also have that range trend, which has been hard closed but not retested yet, back down in that sort of 99, 98 sort of area. So yes, it's not hugely convincing price action. We can go up because we have fallen so quickly. By falling like this, you end up so far away from your trends that you can actually move up and sideways until you actually hit something, and then really the key thing then is, do you actually break it? So like a bullish close as an example would be if the price continues to push up until the end of the day and the 4 hour candle opens on the top side of the trend, then the next 4 hours is key. You've got untested break levels sitting up here at 112. So if you can break out of this origin, get through that trend, the 4 hour would have a target then to try and hit 112. Daily, which is also the daily origin broken and untested. So this is bouncing off the backside of the prior broken trend, and the daily could be hitting up here. So this, again, it's all about how it closes in that next 1 hour and 46 minutes. If it closes over the top of the wick and tries to create a range, let's see what our confluence is like. Looky, so 112 would be the minimum move if this tries to create a range. It would also be the retest, of the prior broken. So, if it does try to create a range, it might be hidden up here, could then reject off that. We're too far away from the trend. Like you either need to pump up big time and get over that trend, or if it moves sort of more slowly, it's still really going to take several days for it to actually get to the point where it's at that trend. So that's us. Now, of course, if it doesn't create this range, it doesn't close over that wick, so that means we're not, so say we do not close over 106.664 by the end of the day, then it can still keep grinding up, but it just doesn't have the support base. So if it rejects with nothing to capture it, basically. And the weeklies. Yeah. the weekly level is going to be that 106. It hasn't hit the 89 yet. I actually don't think it's hit the... Yeah, it's like 20 cents short of actually hitting that previously as well since weekly close. So given we've got 6 days to go, nothing stops this weekly candle from going on a bit of a joyride to the upside. You've got that origin at 109. You've got trend it'll run into at some point between there and there. So, and then you've got the range trend up there at 116. So, I mean, it could go for a bit of a joyride, liquidate a whole bunch of the shorts, or it could reject quite early, just as early as 106, basically, 106.314. It is, or it did close over top of the 100.412. So that's actually a bullish sign. If they really wanted to dump it straight away, they would have just closed under that and then sent it down. So there's a little bit of bullishness in the way they closed that. But yeah, it could stop at 106 or 109 or anywhere in between at the trend and then turn around and come on down. So 89 being that next level. All right, let's have a look at the bigger closes. There's not too many closes today. So we've got 3-day, which is bouncing off support trends. If it closes over 109 or 112, then that's a little bit more bullish. If it closes under those, then expect them to be a resistance. So that's pretty confident with everything else we're seeing. Now, the 1 and the 3-day are the only closes today that are actually shared across exchanges and TradingView. So the 11-day and 33-day are just on TradingView. So they their levels are not quite matching up. But at this stage, we really need that 11-day to get back up over the break. So that would be up over 108. But yeah, like I say, because it's not lining up with what the exchanges are looking at, it's also possible that it just doesn't matter. You know, it may just go through that 108 and tap 109 and, you know, run into some of the resistance that we just saw on the other closes that do line up. You know, bouncing off an origin. Could it go higher? Absolutely. I mean, the next technical origin resistance is all the way up at sort of 117, 118, that sort of area. So it could keep traveling. But yeah, the other stuff is sitting in between that to reject anyway. Looking at the 33. So 33 is currently under the range trends. So, you know, 107, thereabouts, maybe a little lower, 106, that sort of area, once that next candle opens, would be the first resistance. And the first support is going to be the break level, range level. Basically, it's, you know, 93 or 89 if that comes down. The trend will shift. So you might find it does bounce off the trend. So you want to keep a bit of an eye on this. Just see if it comes down and does a first touch bounce, you know, maybe 98, and then push back up to the range trends, 107. And if you wanted to put your bullish hat on, you'd basically say that none of this is hard closed, and therefore it can come all the way back up to the first hard close level, which is like that 126, 125. And there is some pretty scary stuff sitting at 125. So if it goes and touches 125, if you've watched these videos regularly long enough, you'll probably remember me saying we do not want to spend time below 125.919 or 125.916. So there's a pretty good structural reason for that, and it's really big. And yeah, this is technically hard closing that level, so don't know whether that's good in the long term, but this also doesn't line up with what the exchanges are looking at. So it's closing today on TradingView, but it's actually got a little bit more time. So when you look at it based on how the exchanges see it, it closed under that 127.024 previously, went up, hit that backside of that really high time frame origin level, and then just plummeted down to the range support. So that was, that big dump we've had over the last 30 days came about after we wicked into this origin after closing underneath it. In fact, we went quite a way up through it and then grabbed a little liquidity and then came back down, but as you tend to do with bigger moves. So yep, that's where we're at on that one. All right, so summary of Sol. It might keep grinding up along with BTC, but just remember you've got a 3-month Sol BTC hold, which has not played out. We've got things like risk asset market caps, which haven't done their 6-month test of the hard close break level. There's lots of things that say this grind is going to run into something, and when it runs into it, it's going to be another move down. So I think they've pretty much just run out of longs on the short term, and that's why we need to grind up a little bit. And it's pretty evident in the data. The balance of outstanding longs structurally is a lot higher than the balance of outstanding shorts. So it just makes sense to keep the market balanced for price to move up now and complete some of those longs, and then turn around. And I think it was on a live stream yesterday. I showed there's a 100-day close which comes shortly, and we're inside the hold. And when that happens, it'll be the first close inside the hold, and then it may go back up to retest the hold, which is pretty common because it hasn't hit the break level yet. So assuming we don't hit the break level in the next couple of days, close inside the hold, we may push back up because of that. That'll complete a few of the outstanding longs, bring things a bit more in balance, and then if we reject that hold, then back down again. So all right, let's have a look at BTC. So firstly, just on the 1 hour, because of how quickly it's dropped, there is just a multitude of things to retest up here between sort of 84 and 90. We're sitting at the top of the range at the moment. It looks pretty reasonable. We had that sort of low, so we had the big volume dump. Then we sort of had that really low volume ranging. Then we've come down, and then the volume sort of increased, and now we're moving back up. So we're sitting around the top of the 1 hour range, sitting around the top of some pretty old range trends. If we can break through this, then we should be able to get a bit more of a move to the upside, because it is pretty much an air gap, between here and then the 80K sort of area through to that 83 break. So it's looking all right. And if we look at this from a 4 hour, so we bounced off a reverse trend. We landed into the 4 hour origin. We've come back up. We've recovered. We're pretty much, from the looks of it, breaking the hold for the distribution range on the 4 hour. So, and we're sitting above the trend. So it just needs to get a close, over that 78,649 area, or probably 78,729 to be more exact. And that would mean that we are flipping the hold and closing over the break, closing over the trend, recapturing a prior broken trend. It all becomes a little bit more bullish for continuation to the upside if we do that. And then we have things like this hard closed origin up here at about 82K. So that could be a pretty reasonable target once we get out of there, or if we get out of there. And of course, if they want to go bearish, they're just going to dump the heck out of this in the next 1 hour and 34 minutes, and not let it close up over that break level. So that's where we're at on the 4-hour daily. So it's not so bad. It's not a great close unless it really closes over 79.385. Minimum engulfment, high risk engulfment would be sort of that 78.698. So, but yeah, 79.385 is really what you're looking for as far as if this is going to try and create a range to the upside. And, you know, these levels, like these 89 and 92 levels, particularly the 89 level does have some good confluence. So with that hold at the top of the range, so, you know, that could be the top. This may be the bottom of this range between here and 89. But of course, you'd want to keep an eye, and as you can see, there's just all these levels for retest. So there's a lot of reasons to go there. Just like when price goes down to retest prior broken levels, price goes up to retest prior broken levels. So, yeah, all the structure is there in play for this thing to actually start to try and reverse. So that's, but just keep an eye on A, how it closes, and then B, what happens around 81.6, what happens around 85.4, and what happens around 89.1. And you know, then it's got to get out of that break level and break the range trend, and you know, if it's going to continue. Okay, let's just get a quick look at that weekly. So the weekly's bouncing trend never quite touched. I think that, ooh, hey, wrong tool. Yeah, it's coming from the wrong side of the range, but it also came down from the wrong side of the range. So, you know, could this push all the way back up to 85? Yep. Could it hit the range trend and reject, which is about that 81? So that's pretty confluent with those daily levels. You got the daily level there at 81.8, and you've roughly got the range trend sitting there at around 81.7. So it's all pretty similar. And then 85 would be the base of the distribution range on the weekly. So that's all pretty similar. And if it gets up into the 90s, then it's up inside the hold. So, yeah, so that might try to keep moving up. Just remember it's early in the week, 6 days. If this thing starts to show weakness after coming from the wrong side of the resistance, that push up, if it takes out those shorts and then starts to show weakness and roll back down, somewhere in the next 6 days, you could be down under here and you could be hitting these high time frame break levels and heading down to 69K. So just keep a bit of an eye on it. The other side of it too is that, you know, if we get some kind of sustained moves to the upside that just say we just get good daily closes, good daily close, good daily close, and it just keeps going. What that means is that this weekly candle will just be going and going and going and going. And if it actually gets up and over top of the prior weekly there and closes over that 90566, then welcome to a good local bottom. You know, that would be an indication that the liquidity grab is done and they've knocked everybody out and they've got them not liking crypto anymore, and then off it goes. So keep an eye on that through the week. Monthly is bouncing, which actually is, it's kind of the 4-month. The 4-month range level, which is down here at 75330, has pretty much saved the 1-month break level at this stage. So which is 74466.4. So you can thank that little range level for that. I don't know whether that's going to survive though, to be fair. The 74058 level is probably going to get touched. So it's just a case of, you know, do they go back up and roll back down? If they do go back up, how high will they go back up? The 100-day reverse hold is going to be sitting around this whole 90-ish area. So, you know, if we get the 100-day close the way it probably will close. Maybe we push up into there, then come all the way back down, but don't know. Big stuff is hard to time. Okay, let's have a look at the other BTC closes. So what do we got on the 3-day? We have 3-day close today, as long as it stays over 77. There's also, looks like a break. It's an origin. Should just scroll this left, eh? Oh, come on. Trading view. Yeah, so we've got an origin that we're just kind of floating around at the moment. It's 78,217. And we've bounced off 76,562. We haven't hit the breaks. We're above the range level. First resistance is basically showing up at around 80k. If this continues to grind up and closes above 80k in the next hour and 28 minutes, that would be awesome. That shows really intentions to switch structure. But I don't know. The other thing with this is that 3-day structure changed, and the actual resistance level is, or was, I should say, was 84,640. So over here we've got, a candle that's basically just gone from about 84. We closed at and opened at 84,212, went up to 84,238, and then rejected from there, and then we've just gone down through all of this stuff. So yeah, it may keep grinding up. If it doesn't, if the next candle opens and just comes straight through these 80k levels and just keeps on going up, then just be cautious of this 84.6 level, which is the prior structure, because I think that, let's see, it opened 84,212, 84,238. Yeah, so it's not retested that, so that might be where it is heading. Okay, now 11 days. So this has got some differences. It's only closing on TradingView. At the moment, it is up above the break level, which is good. So let's see. Just scroll this across a bit. Yeah, so it needs to stay over that 78,422. It's also bounced off an origin level when you look at it from the other perspective. 86k would sort of be the maximum I would expect that to head up to, just based on this. Over here on this side, though, you could look at something like 82, 83, 85, as retest area. We're far enough away from the trend that it can travel all the way up there if it does it, in a short time frame rather than delaying and going sideways. So we've dived below the range trend. Nothing's hard closed. Yeah, so there's definitely the ability to move up. If they're going to dump this, then what you'll notice is that they'll just bring it down below the break level before the end of the day, and then reject, and then travel down to, well, unfortunately, on this time frame, travel down probably to the trend, which will be much lower down. So that's what we've got going on there. Looking bullish though. It's actually looking like they do want to go back up for a bit. And 33-day, it's above the break level, so that's good. And you've got it's literally just on one candle straight through the entire range. So, 80, 82, 85, 86 are basically the levels within that. If it does like a 50% retracement of the range and then continues to the downside, that would be sort of that 82. So next candle comes up, hits 82, goes down. If it's really going to go bullish and go up and try to hit something higher, then anything up to 86. And 86 would be confluent with the hold reversing as well. So if we headed up to 86, we would run into the new hold that's up here, but we would also run into this older one, which is the first time we've had a candle close inside of it, and we have hit the break level. Okay, so this structurally, this whole range has failed. If it closes under that break level, it's really toast, but at the moment it's 50-50 as to whether that thing can survive. It's going to open on the wrong side of the trend too, so you could even argue that just as soon as you get to the back of that trend, which could be 79, 80K area, it could reject just from there and then come down. But it'd be one of those interesting scenarios where it would be through the cross of the trends. And if you've watched enough of these videos, you know what tends to happen with that. You tend to go one way, sweep liquidity, go the other way, sweep liquidity, and then end up back in the middle again, which is it's a big time frame for that to happen over, but it's probably a pretty likely outcome of pushing up or down, grab whatever. Maybe they take out these longs that have chased and then push up to take out the shorts, or I'd probably be a little bit more bearish if they went up first, just because it's taking out the short liquidity and then letting the longs stick around whilst pushing up into this distribution range, pushing up into this hold, all of that, or potentially reversed hold. So yeah, all of that would be a little bit bearish. Being under the range trend, bearish. Overall, can't get too excited. Does look pretty bearish. Okay, that's us. All right, let's have a look at these other ones now that the markets have opened and see what they've done. So yeah, Tesla on the daily, it's not actually that bad. So we've bounced off the origin, so it hit the break level here at 400 and something on the daily. It's a couple days ago, so so it hit that break level at 419. It didn't distribute back to it the next day, so it's hit it again. It's bounced. It's now definitely completed the retest of the range trend. It's still closed above it. So only negative thing here really is that it's still below the support trend. But looking at the post market price, it's gone right back to the other origin level. So you can sort of see what it's done. It's just swept the downside liquidity below this origin, and it's swept the upside liquidity above this origin. So it's just kind of closing in the middle. But yeah, post market, it's closer to the top side. So if in pre-market it sneaks above that 424.37 and opens up in there, then it may come up to that 430 again to try and test that next level up, which is technically hard closed and should be resistance, has been resistance here, but it did sort of sneak back up above it once and then did a pump, and yeah, it's almost a little bit better if this thing just closes down. Closing down, shifting the trend, and then having something to follow would be better than being sort of under the trend. So that's, but yeah, not really as bad as what I thought would probably happen on a quote-unquote Black Monday. Looking at the weekly, yes, it looks like it tagged the 1618 from that hole, which had already actually played out previously. And we're still got a whole level up there at 137.85 on the weekly, and we're still under the weekly trend. So you can't be sort of uber bullish about this, but it's certainly not the dump I would have expected to see. I would have thought that this thing would have come on down and come down into this lower hold around that 406, tested the range trend. Maybe it still will. Might just be getting a few longs to come in before it does it. MicroStrategy. So that is inside the hold. What's this? Oh, that's the monthly. Yeah, so the monthly close is actually really bad on this. It was inside the hold. It's under the trend. Only thing it hasn't done is hit the $114 break level yet. Looking at the weekly. Yeah, under the range trend on the weekly, rejecting off the back side of the weekly. So yeah, if it stays down here, next port of call is going to be the origin down there at 125 on the weekly. It's got to get up daily hold level to push it to the downside, so that's not not ideal. And it looks like a hard close of the upper origin as well, and below the downtrend still. We have got a range trend support down at about 132, and we've got an untested level there at 126. So, and we've got these 137 levels. So again, that just does not look like it's escaping that downtrend. So you need to see an open. Actually, sorry, post market is up. Post market is up slightly from here, so it may not be hard closing. You really need to see this at least in a position to be over top of this trend, so it needs to be like back into that 144 area, which I suppose it may do if BTC just keeps grinding up. This might actually get up there, and then you need to see it recover this break, which is 149.75, and there's reasons for it to do it, because you've got a level up here at about 150, which hasn't been 158.72, which is broken but hasn't been retested. So there's reasons for that to head up, but it's going to have to get over that trend to actually be able to swing around and go up. So overall looking pretty nasty. Okay. And what's ASTER up to? 56. So ASTER's still just bouncing around that reverse monthly trend. So there's definitely a few green altcoins, which is interesting. See how long it lasts. And yeah, catch you again on the next one, and hopefully we can get some exciting new cool things out soon. Cheers.